Hello everyone, Paul here. Today I'm going to teach you guys a strategy where what I think it could actually make people a lot of money just by using one indicator. And in my last videos I've talked about, some paid indicators, but today I'm only going to teach you guys how to use one indicator to make you can really look at the chart and see which direction it's going to go just with this one indicator. And this one indicator is not a paid indicator; it is a free indicator. So for those that don't want to buy any of the paid indicators that I've mentioned, this one is, I think, extremely powerful because all you'd really need is this one indicator. So let me just go into that, and I'm going to use the example of the stock market because you'll make a lot more money probably doing it with this. It'll work with crypto too, but maybe I'll show some crypto too. But my last videos, I've had the oscillator loaded, which is a paid indicator, and then I had my two EMAs. So what I did is I basically just removed the paid indicator. So now we're just left with the two the moving average. So what I did is I just hid one of the moving averages, and I just looked. I looked at the moving average, the 8 moving average, and I took a notice that all I really did, especially with the stock market, that every time the candle goes through the line, if it goes down or if it goes up, for example, you see that. I'm on the hour. So you see the red candle right here going down, going through the AEMA. So what this tells me is the direction is going to go down. Just by the direction that candle up there did, would have made it's about a $15 difference in price, which means that's 1548. Let's see, 1545 times about 50. That's about $772 right there if you did options. So let's look at this one more time. What you want to look for is the candle going going through the line. If it goes if it goes up through the EMA or goes down through the EMA. If it goes up through the EMA, the AEMA, that's an uptrend. If it goes down, that's a downtrend. So it's very easy to catch. So I am on the hour. So let's do the day real quick. We can really see it really clear with the day. So what we can see right here at the top is this red candle went through. It went down. The direction it went down. And then what happened? What happened after it went through the 8 EMA? It went on a downtrend, and that is a $22 difference in price. Now, if you were to go down here to this point right here where you see this green candle going up, you see this green candle going up, and you basically, if you did a call right here, at this moment right here, the candle went, well, after the candle went through, so you'd probably get it right around here. But anyway, it's just an example. So let's do 7 days out on the day. So if you bought options for 7 days, that would be a $20 difference in price. Well, 1922, 1922 times around 50. So that's about $961 estimate. So this is very, very accurate. If all you have to do is just look at the 8 EMA and see what direction the candle's going. If it shoots down through the 8 EMA, then the direction is going to be in a downtrend. If it shoots up through the 8 EMA, the direction is going to go up. It's that simple. And you can use this for options, and you can make a lot of money doing it. So you see right up here, you see this candle? It dips through the 8 EMA. So if you were to choose to come in, you'd say, hey, look, it went through the 8 EMA. So if you came in right here and you did a put, and you wrote it out for, let's do 7 days. 7 days with an option. That's a $37 difference in price. That is more than $1,000 right there. You see it happens here again. Right here on this green candle, it goes through the 8 EMA. So right around here, if you bought a put, you wrote it out for a little bit. This is 7 days. This is a difference in price by 10. So here's another example. You could do this over and over again. You could do whichever hourly you want to do. You can by hour, you can do it by day. I like doing it by the day because I think you get more gains doing it this way. You can really see it. So you see this red going through the 8 EMA right here. So if you were to buy a put right here and you were to wait like 7 days, you would have made, well, a difference in price, 12.78. And you can just do this over and over again because it's very accurate. The candles are kind of glued to the 8 EMA. So I'm going to do a couple more examples with the S&P 500 and using options. And then I'll go into crypto. So right here you see this green candle going through the 8 EMA. So at this point right here, if you decide to do a call right at this point, and you wrote it out maybe 7 days, right here, that's 8 days or 7 days. Right here you would have made 7 days, 13.39. 13.39. And based on the data, I think you get around like $50 for every dollar that you're right, if I'm not mistaken. Just do your own research on that, but I'm just using this as an estimate. $669 in 7 days. Using options. Now you can use this to day trade, but you won't make as much. You'll make your, how much was that? If you day traded stocks, and you started here. You start here, you day traded stocks, and you waited out to like up here. That's 9%. That's 9% gains. But I would do options personally. So let's find another example. This doesn't work all the time. I still keep the 21 EMA on here just to kind of like double confirm things, but usually I just hide it. So you basically just look for the candle going either up or down through the 8 EMA, and whichever direction it goes at that point, that's what you base your call or your put on. So let's do a couple more times. You see this red candle here going down. So let's say right here you want to do a put, and you wait it out. Let's say 7 days, 7 days, 7 days right here. That is 9.13 difference in price. So that's 9.13. That's about $500 right there. $500 in 7 days. And that is a small move. These big moments right here where you see if you catch these big drops right here, you see the red candle going through the 8 EMA, and you would do a put right here, and you would wait 7 days, and that's a $20 difference in price. I'm going to do one more example of a call, like right here. This works every single, it's pretty accurate if you ask me. So you see the green candle going through the 8 EMA. So right at this point, you would do a call, and you would just wait maybe 7 days. All right, here, difference in price, 1211 times 50. Yeah, it's about $600 in 7 days. Now, you could really start scaling doing this, because once you start making a little bit of money, you can then buy more options. So you're going to be doubling. So, you know, if you're pretty confident that it's going to be working, and the data here is pretty accurate, uh, you could do 2 times, 3 times, 4 times, and let's just do an example for here. Let's say you wanted to base it off of this one right here. So you see the red candle going down. It's going down through the 8 MA. So right here you would put in a put. And let's just say you bought 2 options instead of 1 option, which is going to cost more money, but still. So let's say you did a put right here, and you waited 7 days, and you did two options. So let's wait 7 days right here. So I'm on 7 days. So that's a different. This is a small win. Okay, 434 in 7 days. 434 times 50. Well, that's $217 in 7 days. You did 2 contracts. Yeah, that's doubled, so you made 434. So let's do this one more time with kind of a big run. Let's find a big run and say you want to buy. Let's do this one right here. Let's say you based it off this green candle. It's going through the 8 MA. So right up here, you said, hey, you're going to do a call for whatever price, 422 or something. Let's say you want to buy 2 options, and then you just wrote it out for 7 days. Small one. It's going to be a small one. But you could wait it out from up here, but that's 22 days. So I always only buy options for 7 days, because after I buy the options, I'm just looking at the price and getting in and getting out. But you 5.94 times about 50, then times that if you did 2 options. You made 594 in 7 days. These are the small ones. So these are the small moments. If you catch the big ones, let's just one more time. Let's just do this one here. Let's say you want to do a call option right here. You see the green candle going through the 8 MA. So right up here, you're saying, hey, I'm gonna do a call. So you wait 7 days. Right, there's 7 days. Okay, 6 days. Okay, it's not gonna show me. I'll just do 6 days. 686. We got 686 times about 50 times if you did 2 options here, you would have made $686 in 6 days. So you can see how this will compound, and this strategy is really, really effective. So that's doing options. You can also use this to just buy and sell the stock. You'll know when it's going to go up. You don't pay attention to when it goes down. You pay attention to when it's you get a green candle and it's going up. So yeah, you can do that for stocks. But let's look at crypto real quick. Let's see if this works for crypto. Now, what you want to do, since you can't make money when it goes down, you want to focus on when it goes up. So you see the green candle going through the 8 EMA. So right here would be a good time to buy Bitcoin. And then you could just sell anywhere up here. 6 days you made, well, I'm on the day here, so I'm on the day. So that's 20% in 6 days. So you can't focus when it goes down. You can only focus when it goes up. So this is also a good indicator of when the crypto is going to go up. So let's just do a couple more examples. Okay, so we see the green candle. When you're doing crypto, you got to focus on the green candles. You see the green candle going through, going up, going through the 8 EMA. And what ends up happening in 13 days, you made 22%. Now this is by the day. You can do by the hour. Works both ways. Can't focus when it goes down. Can't focus when it goes down. Now where it is right now, it looks like it's just judging by the 8 EMA. It looks like Bitcoin is going down. I would not get into Bitcoin until it goes through the 8 EMA. Because that's when I know it's probably going to be going up. But let's look at one or two more. Let's go back a little bit. Let's just look for two more scenarios. Let's try to find a good moment when it went up. Did I do that one? I can't remember. Let's just go rewind this a bit. Okay, here we go. There we go. This is really effective. So you see the green candle going through the 8 EMA. So after this point, you would buy some Bitcoin and you just wait it out. Wait it out for 23 days. You made 46%. 46%. So all you're doing is you're just watching it with the 8 EMA, and you're making your gains based off of when it goes. Well, if you're doing stocks and you're doing options, you can do it both ways. But if you're doing crypto, you gotta wait for it to get green. So anyway, I just thought the guys, I have found this. I saw it yesterday and I thought it was helpful, and I hope this video helps people because you could probably make a lot of money just doing this alone. Anyway, not financial advice or anything. It's just what I've observed with reading the charts and things. But anyway, hope this video helped you guys. If you liked the video, make sure you hit the like button, hit the subscribe button, and I'll see you guys in future videos.